Hello and welcome to this edition of Market Wrap. As usual, we have our research head, Mr. Pankaj Pandey with us. Hello, sir. Good evening.
Hi, good evening, Gaurav.
Sir, टाई का कलर लाल है मार्केट भी आजकल लाल हो रहे हैं is this some indication that Monday would be a bad day or something?
Absolutely not. I think it is just that I have been wearing a lot of blue, so I thought let me, for a
Okay.
change, wear a red tie.
Okay, so we are giving
Come,
away Friday blues and coming away with Monday reds.
yeah.
That's
So,
nice. So, sir, let's start with our usual. Yeah, sorry.
so markets are in a
Yeah, sir.
consolidation mode, obviously, at near-time life highs, and mid-cap, small caps also have seen a bit of a profiting of 1.5%. So I think correction at higher levels is not much of a issue. One should not really read too much into it. Global indices are still sort of doing good. Most of them are at 52-week highs. Our sense is that since markets are consolidating at higher levels, which is at about 50-day exponential moving average, so which is, I think, market is making a higher base and eventually it should head towards 23,400 kind of a levels. But for next week, again, since we are in a result season, overall, you'll again continue to see stock specific moves. But broader range for Nifty could be, say, 21,400 to on the lower side to about 22,000 on the higher side.
All right. So going ahead next week, a 600-point range from your end. So, sir, this was Nifty. Bank Nifty, I'll take your cue, but I would want to understand the RBI because we had the MPC meeting yesterday, and post the speech, we saw reaction Bank Nifty, a 800-point cut. So, what is your takeaway from the governor's speech?
So one is, I think, it looked like the RBI is quite strict with inflation numbers. So otherwise, the policy was a non-event. They've kept the repo rate unchanged at 6.5%. The stance continues to remain the same of withdrawal of accommodation, while one member was vouching for a 25 bips rate cut. So that was a welcome change. Good part is that the RBI has revised the FY 25 GDP at 7%. So last 2 years we have been growing at 7.2, 7.3%, and FY25 it looks like we are going to see a 7% growth. So that's a pretty steady growth of what we are seeing in the overall GDP. Inflation has been kept at 4.5%. I think budget also has taken a similar number of 4.5% inflation. Like I said, RBI is quite strict with inflation. So while market was anticipating that RBI might sort of might be more lenient with 4.5% inflation, but they're quite strict with 4% inflation. And possibly our sense is that they are also waiting for how the Fed policy takes shape. And I think action is expected in the second half when the Fed is likely to cut rates. I think quantum is still sort of debated. We started the year with 150 bips kind of a rate cut. Now it's hovering between 100 to 125 bips. I think our sense is that RBI also will start cutting rates by a similar quantum because see, if our inflation is 4.5%, your repo rate is 6.5%. So you're still offering 200 bips kind of a real rate, which again is a good normal course could be in the range of 100 to 125 bips. So that way, I think overall policy has been okay. Now coming to the market reaction, I think people are sort of saying that overall the market reaction was quite weak. But our sense is that market reaction, especially in banking, is weak not because of the RBI policy. It is more to do with the FPI action. Otherwise, if you look at most of the PSU banks have been sort of doing well. The only irony is that their weightage in the overall space being less. And then another culprit is the FMCG as a pack. I think the entire FMCG as a pack is sounding out weakish growth signals, especially on the rural side. So I think somewhere down the line, private sector banks plus a weak FMCG pack did lead to more correction rather than any effect of or reaction to the policy.
So actually, sir, there's one news from the Fed which has come in ki we may expect three rate cuts. And today, if you see the England Central Bank and also said that this year can be we may expect three rate cuts. But yesterday, our governor had a very strict stance on the liquidity. He said that we already have a lot of liquidity in the market, and he's going to be tight on that side. And second thing, sir, which came in for the bank, I think the loan processing fees and everything which comes in, which is a sizable income for banks, where fee income and all those stuff it gets into the balance sheet. Do you think that was one of the reasons for Bank Nifty moving down, especially for private banks? Because first for PSU banks, these fees are not very nominal compared to private sector banks. Was that one of the overreaction that we saw yesterday?
Now, when you look at it from a global perspective, obviously, bank like or the UK central bank or the Europe, they are expected to lag behind the US Federal Reserve in terms of cutting rates because for them the inflation trajectory is still relatively higher compared to what you see in US. Now, coming to sort of private banks specifically, I'll come to the FPI numbers because that might sort of explain the kind of weakness what we are seeing, especially in the banking stocks. Now, we all know that especially private sector banks are the FI favorites. Now, in the month of January, if you look at, while the Nifty hasn't done anything in the last 1.5 months, but Bank Nifty has been under pressure. And you look at the FPI outflows, especially, so FPIs have sold 26,000 odd crores. Out of that, 30,000 crores have been sold specifically in the financial services sector, which is banks. Then the other is they've sold about 2,650 odd crores in the FMCG. And while they have bought into some of the sectors like say oil and gas and technology, and which is where our sense is that the weakness is still persisting in the banks, largely because there has been a continuous FII selling in that particular specific sector. One obvious reason is that BFSI did well, or certain sectors in stocks in the BFSI did well when most of the universe was not doing so well. So it is more of a rebalancing exercise expected. And global cues are still sort of so dollar index is still sort of appreciated. So which is why the outflow is still sort of continuing. So more than policy action, our sense is that it is more to do with the FPI selling, which has been contributing.
Yeah, and I think FII favorites, FPI favorite, HDFC Bank has been the main culprit here because HDFC has the highest, it sees the highest inflows from these foreigners. So, sir, moving from FIIs, FPIs, which you have particularly sum up, MF inflows have been at high. So, your like हम घरेलू लोगों की बात कर लेते हैं, हमारा inflow तो ठीक चल रहा है. What is your take on this?
Absolutely, I think the domestic inflows continues to be a big surprise. One, I think you look at the overall inflows. Those are closer to about 22,000 odd crores, which is again in December you were at about 17,000 odd crores. And if you sort of exclude the NFOs also, even then the inflows are say 20,800 odd crores. Again, largely doubled compared to what we've seen in December and talking month to month. And even in the categories also, I mean, mid caps or small caps, for example, from 2,600 crores, they've got 3,200 crores, mid cap 2,100 crores. This time they've got compared to 1,400 crores. Heartening part was that large caps against an outflow last month of 300 crores, they've got an inflow. And all your sectoral theme funds, so they have been getting 4 to 5,000 crores each on a month-on-month basis. The SIP numbers has seen the maximum jump. I mean, historically, we have seen month-on-month improvement of 500 odd crores. But this time it's about 1,200 crores. So from 17,600 to 18,800 odd crores. That's a massive jump. So we are sort of touching 20,000 odd crores in terms of SIPs, which is $2 billion plus kind of an inflow. This is massive. And if that is the perspective, my sense is that we would not see big correction in the market. Because the economy has been doing well. FPIs have been selling, but they've been buying also in some pockets. Correction, big time correction anytime soon is unlikely to happen.
So buy the dip is the mantra going ahead, probably.
Absolutely,
Yeah,
absolutely.
I think the day these guys return back, I think there would be no stopping Nifty. But the interesting thing, what I saw today, if you see today, we went down to 21,629 or 26 level. But today the selling was noticed in the small caps and the mid cap pockets, particularly compared to the large caps. And by the time we closed, we are in that 21,700 mark. So is this can be a sign that probably the large cap which you're selling with the selling which you're seeing in large caps can be absorbed because Bank Nifty has rebounded today and it rebounded fantastically. I think I saw plus 700 or 600 odd points in Bank Nifty from I think yesterday's closing, and from today's low we have almost recovered 1,000 points. So hopefully we see some recovery in this sector going ahead.
So I'm still not very sure about BFSI as a space because see, we already seen FPI selling quite significant. And mind you, BFSI is one third of your Nifty. So if the selling persists there, then the other sectors have to sort of do the heavy lifting. And IT again uh, does not look like the near term outlook is so rosy that it might lift. Then it is the rest of the other players which have to sort of do the heavy lifting. Which is why I feel that it is more markets are going to be more in a consolidation mode till the time the dollar starts to reverse or we get signs where the US Fed will start sort of cutting rates. But that is, I think, still some time away because next policy meeting is in March.
All right, and we have a very big event coming in from March to May, at least mid-May, and we will have our final budget as well. So I think next 4 5 months would looks like a volatile affair going forward. So sir, I'll leave this discussion here. We can have this discussion next because this is a topic which will go on for at least will go on for at least 3 4 months. Let's come to results. Result season है. I'll start with your favorite, our viewers favorite KG sir. आप result का नया target मांग रहे थे, तो उसी से start करते हैं. Tata Motors sir. I still remember you went gungo here, giving an aggressive target of 810. First, we'll take the result reaction. What do you see in the numbers, and also if there is a revised target, what is it?
So the sad part is that this stock has doubled in the last 1 year. It's gone past our previous target prices. Beyond that, in fact, so which is why, from a fundamental perspective, we have put a target price of 1,000. Numbers were quite good. They made the highest profit in their history in this quarter. The JLR numbers were quite good. Top line grew by 25%. Margins were one of the best at 16.3%. Domestically, also CV they did a margin expansion of about 60, 70 odd bips to 11%. Even the PV business also did margin or witness margin expansion. So nothing to complain in Tata Motors numbers. I think the only challenge what some of these automakers are highlighting is that since we are heading into elections, typically a lot of activity sort of slows down. So you might see some softness there. And if that leads to correction in the stock prices, I think that will be a level to sort of enter again in Tata Motors. At this point in time, we feel that given the already run up we have seen, 1,000 looks a fair price to us. But a lot will also depend on the kind of launches what they are doing, especially on the EV side, which looks quite attractive, and the kind of initial response we get. So once we have that, you never know, we might see better target prices in Tata Motors.
And I think their cash flow guidance for JLR has also been steady. I think if there is a positive change there, I think that will also be a good trigger for Tata Motors going ahead. Because earlier there used to be a lot of problems or any hindrance for Tata Motors stock or result used to be the JLR cash flow. I think that has been steady. If that comes, that they revise it and give like an extra guidance there, I think that would be a good trigger for the stock.
So JLR cash flow guidance is intact at over 2 billion pounds. But I think since they are also sort of the base is higher for them to sort of deliver on a higher base could be a sort of a challenge. So I think, and then on top of it, we would have elections in the coming months. So obviously, some activity sort of slows down. I think these are the only minor challenges what can sort of come up.
Okay, all is well in Tata Motors. Target price of 1,000. Ones who are holding it anyways, you have asked them to hold it. So I think लोगों ने double के ऊपर ही बना लिया इसको. That's great. Sir, moving to next auto stock, that is Ashok Leyland. Ashok Leyland has also come out with their numbers. Your take on their numbers?
So, like Tata Motors, this company also came out with a good set of numbers. Margin profile was better at 12%, up about 80 bips quarter on quarter. Now, for them, the overall mix of, say, for example, medium and heavy commercial vehicle was on a lower side, and despite that, I think they've done decently well. They are slightly going slow on the passenger or EV side versus. But our sense is that, given the fact that government is looking to sort of scale up this segment in a big way to sort of curb pollution as well, so this company is poised well. The other thing is that since they're already sort of cash rich, they're not taking on board new investors for their EV business, which has been the biggest or which could be the biggest trigger point for the stock going forward. But we like the stock at current valuations of 9 times EV by EBITDA. So our sense is that the stock looks good with a target price of 225.
All right, sir, 225. Next number is it's like the main thing. State Bank of India came out with absolute, like, I think there was a mixed reaction from many people ki number अच्छे नहीं, number अच्छे, but I think profit was supposed to go down. That was expected because on account of they have revised their pension thing. I think the retirement they had this. I don't remember the number exactly. I think 7,400 crores is the number which came in for their retirees, and that because of that the net profit went in. But sir, last time when we spoke, State Bank of India, we had a target of 720, which we have 728. We reached that target. So your reaction on SBI, and if there is a revised target for SBI?
So SBI overall see business growth. If you look at 14.5% advances growth, pretty good. 13% deposit growth is also quite good. I think the only challenge was that there was one-time provision so that sort of impacted the profit growth. Then I think overall margins declined about 9-10 odd bips, so 3.34%. So overall going forward expectation is that they'll deliver about 13-14% kind of a inline industry advance growth. And I think why we like SBI the most is within the BFSI as a pack is that this is one bank where ROEs are expected to remain in 1% for FY25-26. And there are a number of triggers for this. So for example, our sense is that this year, we should see yields declining by 50 odd bips, if not more, because that is the quantum of a rate cut we would expect. Mind you, we are already at 200 bips real rate we are offering. So if the decline is say 1% in yields, which is very much possible in the second half, then SBI could be one of the biggest beneficiaries. We are not obviously taking the numbers of 50 bips kind of a decline would push up their FY25 profits by 10%. So I think this is the best bank to sort of take an exposure in the BFSI, even better than private counterparts. Here we have revised our target price to 800.
Answer in BFSI, I'll just stress on it again. I think deposit growth has been the biggest challenge that private banks have actually seen, and HDFC Bank has a loan to deposit credit to deposit ratio of 110%. I think PSU banks are better placed in that sense as well, and the valuation is also attractive. And if we remove that one-time provisioning of SBI, their NIMS was also better. I think it has come to a higher range if we take that into account. So given the entire space, I think PSU is the place to be in, and we have seen massive reaction from the market as well. Indian Overseas Bank went from 41 to 80. SBI itself went to 626, and now it is near 720. So we have also seen a 100-point move. And yesterday, when there was a cut in Bank Nifty, BOB and SBI were the ones which were holding the fort. So they did really well in that fall as well. So it is a clear indication that PSU is the place to be in if you are in banking sector.
Absolutely. I think so. Since you have already sort of highlighted, see, for a private bank, say for example, HDFC Bank, credit deposit ratio has gone beyond 100, whereas for most of the PSU, it's closer to 80 odd percent. So they still have a headroom to sort of grow. And what I also sort of forgot to highlight is that if the RBI changes their stance, which is what we would expect them to sort of do in the second half, What that would do is that would cool off the short-term rates, and the deposit pressure could sort of ease off. So, so before rate cut, it is possible that the RBI will change their stance, and that will be the first pseudo rate cut we will see. And I think the triggers for a big bank like SBI actually starts from there on. So our sense is that you have multiple triggers in the stock. So which is why I feel that, and not many challenges to the kind of 13-14 growth rate, what they're looking to do. So from that perspective, SBI looks good. We are still not looking at a scenario when some of these PSUs will grow a lot more higher, because that is has happened in the past when the multiples for them had gone up one to about 1.5 time book. So that is still not a scenario we are sort of penciling in.
Absolutely. So, sir, we would have a revised target after 800, right? Because this is just 10%. Not fair.
So we are in a dynamic market situation. The stock prices keeps on reacting. So these are when we had released the last update.
Okay, no problem. So 800 is a target price viewers for SBI. So moving on from auto to banking, now let's move to pharma. We had numbers from Lupin, again a stock which gave good reaction to the market post reaction. So what is your take here?
So, like most of your US-based exporters, Lupin also came out with good set of numbers. Top line grew 20%. The US growth was even better at 24%. The domestic business grew at about 13, 14 odd percent. There was a good margin expansion. I think good part is that after 9 quarters, this company has achieved 20% EBITDA margins. And I think they're still focusing on complex generic portfolios in the US. So for that perspective, we feel that the pharma as a sector is witnessing a turnaround, unlike chemicals at this point in time. And Lupin also is sort of a step in a similar direction. So very good set of numbers, but the stock has run up, so I'll not put a target to it at this point in time.
All right, I'll let you go on that. Okay, moving on to next, another, I won't say the pharma sector, but hospital and Apollo Hospital is the next next stock which company which came out with results. Again, good set of numbers. I think ARPOB, I think average revenue per bed. I think that is the metric here. I think we have seen good jump there as well. So, what is your take on this stock?
So I thought hospitals I'll sort of cover in the next this thing, but in general, hospitals have done very well. The ARPOB growth for even this company is about 10 odd percent. Some of the other players, the ARPOB growth has been
Yeah.
pretty robust. So hospital as a segment is doing very well for across companies. And Apollo was no exception to this. I think their margin profile here in the hospital business was about 24%. Plus, they are looking to add closer to 3,000 beds with a 3,400 crore kind of a capex. It's a pretty sustainable growth. So, hospital is like a new FMCG for the next 10, 15 years. That is what I would say, because this is one need which is very inherent and very sustainable kind of a demand. And besides the hospital, they have also got the pharmacy business also, which is also sort of doing well with a 6-7% kind of a margin. So I think, given the fact that when you look at FMCG numbers and you look at hospitals, so hospital looks like what I call a forced consumption to happen. But definitely, it is a consumption where the growth is quite higher. Margins are expanding for the players.
So
So
I'll
I'm
just
pleasantly surprised.
Yeah, let's put hospitals into hospitality part because everything is almost the same and you're putting in the same margins. But sir, I'll just skip there.
No, the people have actually clubbed that. When you sort of look at the Ahmedabad final match which happened, people had booked hospitals for a significant amount to watch matches.
Okay, I think, and well, and like these hospitals of higher ends, if you go to their suites and all the stuff, it looks like a five-star hotel where everything
Absolutely.
is taken care of. So that's the thing here. We can't have an escape from there. So these were the news that I had to cover. We have one question in the chat box there. That is, view on what is your outlook on Bajaj Finserv and Bajaj Finance? Well, Bajaj Finance has corrected heavily from 8,000 levels to 66 odd 100 levels. So what is your take here?
So Bajaj Finserv, I think 70% of the value is derived through Bajaj Finance. So both of them directionally behave in a similar manner. Now, so Bajaj Finance continues to deliver 30% kind of a AUM growth. So there is nothing to sort of complain in numbers, but it's trading in at 5.5 times book. Now the challenge is that Bajaj Finance did exceptionally well because this was the only retail NBFC which was delivering good double-digit growth. Now you have multiple options. So now you have L&T Finance, which is entire book is retail. You have Shriram Finance, which again largely CV but diversifying. Then you have Chola, which is also there. So you have multiple options and good options available on the table for an investor. So which is where I think Bajaj Finance structurally, to me, looks like is going to do a lot more time correction, if not price correction. So I think I don't see that this stock outperforming Nifty, despite the fact that overall its growth rate is going to be good. So you'll see multiples getting sort of corrected. My suggestion again would be to sort of look at the other retail, NBFCs. I think they look a lot more structurally positive.
And sir, one observation I have on this that Bajaj Finance being a behemoth of itself, it won't be easy for it to grow because the level of book it has. Also, sir, there used to be thing when you used to go to any shopping center, like if you go to a electronics store or something, Bajaj Finance free EMI used to always be the case there. But now, if you see, banks have come into that space, and with the advent of Geo Finance as well, things would be very competitive for Bajaj Finance, and that can be one of the reasons where consolidation may happen in this space and we have new entrants there. So one first mover advantage or the only mover advantage Bajaj had, I think that can also be one of the triggers. That's my
So,
observation.
so forget that banks offering those kind of solution. Even if you look at credit card companies, the moment you do a
Yes.
decent amount of spend on credit card, you get a call from credit card company stating that would you want to sort of convert this transaction into EMI?
Yes.
So obviously they've got more competition. That goes without saying as of now.
Absolutely. So these were the news that we had to cover, the questions. Now our special edition, that is our hidden gem for the week, which is that companies are and which sector.
So I think most of the sectors have run up. I think the only sector where you are seeing margin expansion plus volume growth happening and valuation being reasonable, that is cement and infra. So I'm recommending Birla Corporation with a target price of 2020 now. So this stock is at about 8 times EV by EBITDA. The bigger players are between say 15 to 20 times EV by EBITDA. Now, this company delivered a volume growth of about 13.5% in the last 9 months because they had expanded their capacity by nearly 4 million tons early part of this year. And so their capacity is 24 million tons. Even going forward, also they are looking to take their capacity to about 30 million tons. So growth is going to be there. Then EBITDA per ton for this quarter, like for most of the players, expanded because the power and fuel cost had sort of come down. So now it has come to 900 rupees. So this company has got all the combinations of pricing growth. I'm not talking of volume growth. I'm not talking about pricing growth plus margin expansion plus debt reduction. So all of it is going to sort of find favor. And then there is a good amount of discounting or the valuation gap between a large cap player and this is quite high. So our sense is that this stock looks attractive to us. We've been positive on this stock for quite some time. We have expanded our target price to 2020 on the stock.
Okay. Okay. Sir, there was a mail which we got in the morning from our viewer, Mr. Kiran Ghatke. He's there on the chat. So would you want to answer it or you will be mailing it like what? Because he had given some stocks.
Yeah, so I think if I recollect, one question was regarding HCG infra
Yeah,
and then the KNR and PSP.
that's right.
So I'll start with KNR first. Now, KNR, the challenge is that they've not been taking orders. Their order book to bill ratio is 1.7, so they don't have an order visibility for 2 years. So they need to take orders. Otherwise, they've got one of the best balance sheets. They are very good in terms of execution. Since the stock has not run up, I think one could sort of wait it out because our sense is that post-election, they would look to sort of bag more orders because growth has been the major problem for this company. Otherwise, there's nothing to sort of complain in this company. But I think that is some time away where the stock price performance happens because they need to sort of bag new orders. That is one. Then on the PSP, top line growth has been good, but there was a margin dip, so that is a bit concerning because for any infra company, if the margin sort of dips, then it has a lot more ramifications. But I think we are yet to sort of get a concrete answer. So they have a con call somewhere, I think this evening. So once we have that, probably we can. Otherwise, PSP also looks good to us because this is one company which has been giving fairly good amount of growth, though largely concentrated to certain geographies like Gujarat. But this is another company where the balance sheets have been good. I think infra companies, one should be very mindful of the fact of their balance sheet. So if there's not much of a debt sitting on the books, or if they are not taking low margin orders, I think one should consider these companies as good companies. Then HEG Infra, I think, has already done very well. I think the stock was down intraday and it sort of picked up towards the close. So this company is talking about 20% kind of a growth rate. They have already done some bit of asset monetization. So I'll not be surprised if it delivers the kind of return what they are talking in terms of growth rate. So HEG Infra, I think there's nothing to complain. It is good to go. They've been doing well and they're talking of good growth. So I think HEG, no issues.
And I think once the election gets over and the government is voted back, the spending and all will happen and these infra companies will be back in action probably soon. So viewers, we'll end this session here. If you have any doubts or anything that you need us to cover, please mail it to us. We'll drop our mail ID in I'll drop my own mail ID and
Gaurav, one more I would want to sort of highlight is that we have been positive on a company like say even NCC for quite some time. Now NCC one point of time used to get say 10, 11 multiple, right? Now, and that is when we were not very sure of what kind of growth. Now, companies consistently talking of 15% kind of a growth. So, which is why if your balance sheet is okay and your growth is sort of inching up, the re-rating happens. And like I said, most of your infra companies are still sort of relatively quite okay in terms of balance sheets.
Absolutely. And with the spending, the focus on infra and everything, I think this space is here to stay. And what do you call it? This will be the glitter of 2024, I can just say, because you are also very bullish on defense, infra, and auto. So that's it, sir. I'll put my email ID. Is it okay if I put your email ID also? If somebody has any doubt, I'll put it in the chat.
Absolutely.
Okay, I'll do that. So viewers, thank you. Once this video ends, you can come back to this video. You'll find the email IDs in the comment section from our end. So thank you, Pankaj sir, for taking time on this Friday. See you next Friday. Thank you so much.
Pleasure.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.